The United States government is facing a critical financial situation, with dire predictions of global financial chaos if Congress fails to agree on a deal to raise the debt ceiling. As the possibility of running out of money looms, it is essential to understand the intricacies of the debt ceiling and its implications. This comprehensive guide video will provide you a detailed overview of the debt ceiling, its significance, and the role of the 14th Amendment in this context. What is the debt ceiling? The debt ceiling, also known as the debt limit, is a statutory law that places a maximum limit on the total amount of money the U.S. government can borrow to meet its financial obligations. This includes payments for federal employees, the military, Social Security, Medicare, interest on the national debt, and tax refunds. Periodically, Congress votes to raise or suspend the debt ceiling, allowing the government to borrow more money when needed. The current debt ceiling stands at approximately $31.4 trillion. However, in January, the limit was breached, prompting the Treasury Department to employ extraordinary measures to provide temporary cash flow while a long-term solution was sought. What will be the implications of not raising the debt ceiling? If Congress fails to raise the debt ceiling, the consequences could be severe and far-reaching. The government would be unable to pay federal and military employees, leading to a halt in essential services. Social Security payments, relied upon by millions of pensioners, would cease, placing a significant burden on vulnerable individuals. Furthermore, companies and charitable organizations that depend on government funding would be at risk. Failure to make interest payments on the national debt would result in a default, creating shockwaves throughout the financial system. The U.S. briefly experienced a default in 1979 due to accidental check processing issues, but a deliberate default would have catastrophic consequences. With over $500 billion in U.S. debt traded daily, the ramifications would be felt globally. Moody's Analytics predicts a prolonged standoff would cause stock prices to plummet by nearly a fifth, the economy to contract by over 4%, and a loss of more than 7 million jobs. What will be the long-term effects and economic ramifications? Beyond the immediate crisis, the perception of U.S. debt as risky could lead to increased borrowing costs. Investors would demand higher interest rates, influencing rates throughout the economy. Consequently, borrowing for homes, cars, and other essential expenses would become more expensive for individuals and businesses alike. The 14th Amendment and its relevance. In the absence of a deal, some have suggested invoking the 14th Amendment of the U.S. Constitution as a means to bypass Congress. The relevant section of the amendment states that the validity of the public debt of the United States shall not be questioned. Originally enacted after the U.S. Civil War, this clause aimed to ensure the payment of war debts and prevent claims for reparations by slave-holding states. While President Joe Biden has mentioned considering this approach, utilizing the 14th Amendment to challenge the debt limit law would likely lead to a constitutional crisis and spark legal battles. Treasury Secretary Janet Yellen has downplayed the possibility, emphasizing the potential for further complications. What are the current proposals and negotiations? Presently, various proposals are being discussed in Congress. Republicans have put forward a deal to suspend the debt limit by $1.5 trillion, or until March 31st. However, in exchange, spending for key agencies during the next fiscal year would be limited to 2022 levels, with growth capped at 1% annually over the next decade. Such measures could result in savings of $4.8 trillion, but would repeal significant priorities of the Biden administration, including student loan forgiveness and tax incentives for electric vehicles. The White House has rejected the Republican proposal, highlighting concerns that it places an unfair burden on middle-class and working families, while providing tax cuts for the wealthiest individuals. They argue that it does not align with their vision of using government power as a force for good to address societal issues and historical injustices. Many analysts anticipate the need for a short-term extension to allow Congress more time to negotiate a comprehensive agreement. In the past, similar situations have resulted in last-minute compromises, such as the 2011 deal that included $900 billion in spending cuts over 10 years. However, even temporary delays in resolving the issue have consequences. The 2011 debt ceiling standoff led to a downgrade in the U.S. credit rating, a sharp decline in the stock market, and an estimated cost of at least $1.3 billion in higher borrowing costs for the public. The current impasse poses similar risks, with potential economic repercussions, including job insecurity, increased interest rates, and overall instability. The debate surrounding the debt ceiling highlights fundamental ideological differences between the two major U.S. political parties. Republicans tend to view government spending with skepticism, considering rising national debt as indicative of an out-of-control government. They argue that debt limit brinkmanship is necessary to prevent long-term economic and social ruin. Democrats, on the other hand, generally see the power of the national government as a means to improve lives and rectify historical injustices. They view raising the debt ceiling as a routine housekeeping measure required to maintain government operations and fund approved legislative programs. Under the presidency of Donald Trump, a Republican, the debt ceiling was raised 3 times without significant debate. However, with President Joe Biden taking office, the debate has been reignited, underscoring the partisan nature of the issue. The U.S. government's debt ceiling and the ongoing debate surrounding its increase have far-reaching implications for the nation's financial stability, economy, and social welfare. Failing to raise the debt ceiling could lead to dire consequences, including default, halted services, and severe economic downturns. While the 14th Amendment has been suggested as a potential workaround, invoking it would likely spark legal battles and a constitutional crisis. As negotiations continue, it is crucial for Congress to reach a resolution to avoid the risks associated with a default. Balancing the need for fiscal responsibility and addressing societal concerns is a delicate task, highlighting the ideological differences between the political parties. Ultimately, a bipartisan agreement is necessary to ensure the continued functioning of the government and mitigate the potential adverse effects on the U.S. economy and the well-being of its citizens.